Okay, I officially did record right this time. And I'm going to go ahead and let Craig in and we'll just finish up. But yeah, I invited Emma. I let her know we didn't have a special guest this week, and she'd be more than welcome to pop in and share another social media tip. But she said she had a prior commitment, so we will see Emma next week on her regularly scheduled time to come in and do some social media tips for the agents. Well, actually, I'm finding them just as useful as the agents are, quite frankly. They're universal tips. So
well, it's always good stuff. You know that. I mean, it's always useful, like you said. And she's pretty good at it. I think age is on her side, though. I'm going with that one.
Yeah, it's definitely an advantage when you're a millennial to come in and talk about this social media, especially Facebook, man.
Oh yeah.
Don't get me started on Facebook. Hey, it's 8:32 though, so let's roll into this bad boy. We got a couple folks joining us this week, so welcome Craig, welcome Laura. I'm glad you guys made it. I'm sure we'll have a couple more probably pop in as we get rolling here. You guys probably know me by now. My name's Kirk Brewer. I'm the loan geek, self-proclaimed loan geek, and the branch manager for Finance of America in Chandler. And then my sidekick, you guys probably know him too.
Yeah, Shane Sauer, sales manager over at Greystone Title Agency, and I know I've met Craig. I know Craig real well. I don't know if Laura and I have met, but now we have, just like that. Now we're pals.
Yeah, and by the way, guys, feel free to unmute yourselves at any time during our meeting, and if you got a question, you got a comment you want to pipe in. That's what this is really about. It's not about Shane and I being Laurel and Hardy or something, or the Two Stooges. But really, it's just meant to be a hangout where we can talk about the market and stuff. Shane and I like to cover a couple things kind of right out of the gate, just to kind of catch up this week. Thing I like to do, and I'll just jump right into it right now. Is I like to just share where rates are going. Agents are always being asked about rates. Hey, there's Raj. So I like to just kind of share where rates are trending. And so let me share my screen real quick and show you guys where we're at. Can you guys see my screen? Mm-hmm. Are we good? Cool. So this is my website. It's loangeeks.com. Just like it sounds, LOANG or LOANGEEKS.com. And if you click right up here on the mortgage rates icon, that's going to take you to our rates page. I update that page once a day. It's done manually. Hey, Raj, glad you can make it. Good to see you. So every day the rates are updated at least once a day, and I like to keep it current. It's a great resource for you guys to just go see what's going on. And see where rates are trending. So we'll just cover these real quick. Rates are holding right down near the historic lows. We trended down here over the last week and a half, 2 weeks, and they're just kind of hugging those lows. We bounced off a little bit late this week, but not a whole lot to write home about as far as, it's 20 basis points kind of thing. So on a 15-year conventional for a well-qualified borrower, and these are purchase rates, by the way, the rates I'm sharing with you, it's 2.5% on a 15-year fix. I mean, it's just insane. I've got a couple clients that I'm refinancing right now that are hanging right at those numbers too. On the 30-year fixed, we ticked just under 3% again on a purchase for a well-qualified borrower. That's conventional. FHA, we're hugging right at that 2.75. Same with the VA. And like I mentioned in previous weeks, the government-backed or insured loans are still carrying a little bit of a premium. You see that those come with half a point. Those aren't at par. There's a premium built in having to do with the CARES Act and forbearance and how lenders have to bear a lot of the financial responsibility associated with those forbearances. And so there's a premium built into those. And then last but not least, our jumbo fixed rate, that's hanging right there in the mid threes. It's come back down. It was all the way up in the mid fours right after COVID initially hit. For the few jumbo lenders that stayed in the market. A lot of them bailed out initially and they've started to come back in. We've pretty much got all of our jumbo products back now, but you can see the rates are a little bit higher. And I think as things continue to stabilize, I don't know if you guys watch the stock market, but stock market is pretty much right back to where it fell, at least on the S&P. The Dow's lagging a little bit. Jobs numbers look like they're trending in the right direction. So as long as things continue to stabilize, I think we'll see those jumbo numbers come right back down in line with the conventional numbers, which is where they had been for the last few years. They've been super competitive. So that's where we're at on rates. And then last but not least, I always just like to remind you guys, we've got a really cool program. I'm really proud of it. It's been in place for a couple years now. It's just not something we rolled out with COVID, called our Community Heroes program. And that's a real solid discount program for first responders like police, firemen, paramedics, EMTs, those kind of guys, but also medical professionals, teachers, as well as active duty and retired military. And that includes like Coast Guard and Reserve as well. They get a full $1,000 off of their closing costs through that program. And it doesn't matter if it's a purchase or a refinance. So if you guys have any clients or you have any friends that are thinking about refinancing that work in those professions, get them over. We love saving people money from those professions. They just do so much for our communities. And right now, I think we all know, quite frankly, really how much they do for our communities. So it's an awesome program. I'm going to turn it on over to Shane.
Hey, Kirk, before I get into what some of my stuff here, I got to ask you a question. So this has been coming up time and time again. I talk to a lot of real estate agents, appraisal waivers.
Yeah, that's a great topic for this week.
What are you seeing on your end? And I know it's got to affect the lending side as much. I mean, there's still only so much you could borrow, right? I mean, how does an appraisal waiver, how does all that kind of tie in with where you're at right now?
Well, appraisal waivers an interesting phenomenon that's become available here over the last 12 to 18 months or so. Prior to that, you never really heard of the thing. And what it is an offshoot. For anybody who's been a real estate agent over the last 10 years, remember Fannie Mae rolled out this thing called collateral underwriter, and everybody freaked out. It was going to slow down the process. It could overwrite appraisals. Underwriters had to review it, and depending on the rating, it could get kicked back, and we'd have to do a second appraisal. And just the sky was falling, right? It was the death of the industry. It was really going to hurt. Well, it turned out to be kind of more like a speed bump than a hurdle, more of a no, never mind. But what ended up coming out of that program was they were collecting data. That's really what they were doing. They were collecting data on all of these appraisals in all of these areas, zip codes, and doing all that quantification on square footage, rooms, bathrooms, all of that stuff, so that their automated underwriting system could then in the future process that information on a current transaction based on address and go, you know what, we're really comfortable with that property at that value. We don't need an appraisal on it. And so that's what the offshoot of that whole thing has been. A typical conventional appraisal runs $475. That's not cheap, right? Thank the government for this whole, CVCC thing that came out of Como and New York and all that. As we rolled out of the housing crisis, all it did was bump up the cost of an appraisal because you put a middleman in the process. So saving that is huge. We tend to get them more on refinances, right? Because they're already in the home, the lien already exists, there's a track record there, all of that. But we see them on purchases too. It's pretty cool. Sometimes it's kind of crazy. I think for sure I'll get one. I got a client with crazy high FICO scores, low loan to value. Everything's just like a piece of cake. We should get an appraisal waiver, right? It's super safe. For the life of me, we don't get it. And the only thing I can attribute that to is the database can't tie that loan to being directly owned by Fannie Mae or Freddie Mac. it's owned by a third party investor and they're not comfortable with it, or the property hasn't been financed in years and they don't have enough data. So I hope that answers your question. That's a really quick, like 2-minute primer on appraisal waivers.
Yeah, it's crazy. You have between appraisal
Oh,
waivers and appraisal contingencies being waived out there with purchases now because people are going up over the top because in order to get a home. Yeah, just kind of blowing the lid off of a lot of stuff out there, which is probably skewing values a little bit. It's got to, right? I mean, if you're
I've seen some on the high side where it's like you never thought, you know, you knew it was high because the market's being pushed up. And I'm like, okay, we're for sure going to get an appraisal, even though the borrower's well qualified. And then we get it. And it's like, well, I know that that's high. The last comp in that neighborhood was 430 and this is 465.
yeah.
Right. And we get an appraisal waiver. And I'm like, okay, well, that's cool. Their algorithm felt comfortable enough to say it's okay. Right. So we roll with it.
Yeah. It's an interesting market we have, and I was talking to somebody yesterday. It's like, you know, we've got these high values in the homes, the high list prices, low inventory, and low interest rates. It's like 3 trains on the same track coming right towards each other. You know, almost it's I don't know how to really put that into words. It's just an interesting time. All this is kind of just building at the same point. But so the last couple of weeks for me have been extremely interesting with the fact that I've got a lot of agents out there going back to straight up farming, looking for listings, looking for stuff. We actually, I know I talked about listing booster a couple of weeks ago at one of our meetings on Friday, and I got that. And you know, I'm looking for ways to leverage existing listings for more business or find listings under rocks where we couldn't find them before. So there's been a lot. I've talked to so many people lately about, okay, let's go. And I've got like direct mail and email campaigns going and all kinds of stuff happening right now. It's kind of getting back to basics in a lot of ways. I had a conversation yesterday with an agent last night actually, and she big Buffini agent, loves Brian Buffini stuff, and I applaud that as well. But it's like any other system. If you don't work it, it does not work for you. It doesn't do your job for you. You have to actually put work into it. But it's been, she was talking about, they had a big conference, and they talked about direct mail and how direct mail never stopped working. It's still the top dog out there. It's like, but people just got away from it. But now all of a sudden I'm seeing more of a pushback to direct mail, which is awesome because I've always been a big believer in that. So, so over the past week, I'll share with you a little bit our market update. I pulled Phoenix because everyone's pretty central. I know we've got Paulette, who's out in the West Valley, I think, and Craig, I know, who's down in the Southeast Valley. I don't know where Raj is. He's probably close to. His signal looks good, so he might be right next door to me. I don't know. He could be at Stoner Vine Restaurant right next door having breakfast, for all I know. His signal looks good. So anyway, looking at the market updates this week, I mean, it is really clicking more so over to the seller side. This little market index here, Chandler, I think, was sitting at a 70 right now, and I always look at Chandler because I live in Chandler and I work out of a Chandler office. But looking at Phoenix real quick and looking at the median list prices and how much has climbed over time, and you can see it right here. I mean, it's pretty clear where this is going.
yeah.
So, and not a secret at all. I mean, it has settled down a little bit, but we're seeing a lot of listings coming on that are on the lower end of their spectrum. Still, to me, 394 that's expensive to me. But you know, they're looking at this, and so it's been weighted down a little bit. But still, you can see where this inventory, how it's just being gobbled up like as soon as it's hitting the market. It's really it's become you know, every week now I'm not so surprised at what I'm looking at. Before I kind of was. Now it's just kind of like, well, here's where we're at. Somebody told me earlier this week, I was on with a real estate agent who pulled up the active listings. I think it must have been Maricopa County, but there was like 7,800 active listings, and she's like, oh my God, that's so low. And I'm like, yeah, so let's find some more listings. we're talking about going after even Canadians, because Canadians are in Canada and they don't want to come back to Arizona because we're full of COVID here. It's crazy. So, and I don't know that they actually can. And they can't get back because I think the border is still closed. So there might be a ripe opportunity to pick up some listings from some Canadian owners down here. I'm actually going through an exercise with a group that I work with, a group of agents I work with, and we're going to start pulling these things, and maybe setting up some kind of campaign to go after that. But I think right now you've got to really think a little bit outside the box to pick up more listings. It's not as I guess cookie cutter as it was. It's like you got to kind of think outside the box to pick these guys up. So, that's something I've been able to do. Put two heads are always better than one. So let's talk. Let's see if we can find a niche to go after these things, because they're there. We just have to find them.
Well, and we've talked about this in a couple previous meetings, Shane, and I think probably now more than ever, this is just my common sense. I could be completely 180 degrees wrong, but I think it would be pretty easy to go out onto these Airbnb type websites, search for rentals available in an area that you want to market or farm, and then cross-reference that against the listing for the owner, right? And market to those. I have to think that they're not getting the rentals. They're sitting vacant. Okay. And if they're depending on rentals to pay their mortgage, they're probably getting pretty hard up. And it's a great time to be a seller. So they're probably going to walk away with a profit.
Oh, yeah, absolutely. So on that note, okay, I thought the same thing. I was 100% with your line of thinking on that. Now, I had a class earlier this week with Patrick McQueen, who's an attorney, and some of you have probably been to his classes. Patrick's an awesome instructor. He's an attorney. He deals mostly in short-term rentals and stuff like that. That's kind of his wheelhouse. He does a great class on short-term rentals and legalities of them and whatever. So we talked Tuesday. We had a CE class, just he and I, because I had a sponsor who things happened and they couldn't be there. But we talked about evictions and things like that were coming up. We started talking about that because, he told people before the class, he said, if you have your property management, you want to start the eviction process now.
Yeah.
And he's like, there's going to be a lot more inventory coming on the market. But he talked because of foreclosure and stuff, but he talked about Airbnb especially. So he said, Airbnb properties, okay, those properties that are used for Airbnb are now at the same point they were pre-COVID as far as income. I was a little like, really? That doesn't seem to make, but he's the expert and I am not. So I'm like, I'm going to listen to what he says. And if he's telling me that those are cash flowing the same as they were pre-COVID, dude, you've taught me something today, because I would never, ever have thought that to be true.
Well, I have a real life.
I was quite surprised when Patrick said that. I was also in one of his webinars.
Yep.
And the reasons, it somewhat makes sense because people don't want to go to a hotel. People don't want to go to places where there are multiple people.
Yep.
They just want a place to themselves or their family. So there's least chance of catching an infection.
So you were in the were you in the class with us on Tuesday, Raj?
I can't remember, but I've attended multiple classes with Patrick McQueen. He's fantastic.
Oh, he is.
Yeah.
He's really very good. And I'm glad I just didn't hear that. I didn't make that up in my mind. I'm glad I heard it and actually verified it, because I was like, I think I was doing something else. I was looking away. I'm like, what? It's like one of those with the ear. I was like, what?
Yeah, it was a surprise to me too. Yeah.
Yeah, it seems hard to believe that could be true, but hey, that's what he deals in. So
I've got a real live data point that supports that. I've got a client that I'm refinancing right now, And a few years back, he built an addition onto his home, which is pretty much downtown Old Town Scottsdale.
Mhm.
And he Airbnbs that addition. It's basically a little duplex. And he thought he was going to just have no traffic whatsoever. It's been completely the opposite. Normally, summer slows down for him for Airbnb.
Yeah.
He said his summer saved him. It's gone through the roof. And what he said is he's got people who they're not flying. It's exactly what Raj was mentioning relative to they don't want to be in a hotel, but they still want to travel. They want to get away from home and depressurize, de-stress a little bit. And so they're getting in their car, and Phoenix is accessible pretty easily from obviously Southern California and some of the other bordering states like Colorado or New Mexico, Utah. He says he's even got people driving in from Washington and Oregon and staying in his Airbnb. So he's been booked solid.
That's great.
Makes no sense to me personally, but it was like, this is the hottest summer we've had for, seems like 10 years. It's been crazy hot. And people are coming here to fry.
But Scottsdale is #1 Airbnb destination in the whole nation. Yeah.
Wow, really?
Yeah. People are they were making killing. Now this year is different, but it's coming back for sure. Now, I do own few properties, and I only do long-term rentals. I don't want to deal with cleaning and, monthlies and people constantly coming in and out. It's a hassle. But so I was buying smaller townhouse type of deals. Now I'm also venturing into slightly bigger homes. I bought a nice luxury townhouse and rented for close to $3,000, unfurnished. So rental market is just busy, busy, busy.
Oh yeah.
Yeah. For some of my wealthy clients, I got them a rental midtown, Camelback Road, 2-bedroom apartment for $4,000. And if you wait too long, if you wait 2 days just to kind of think it over, rentals are gone.
Mm-hmm. Yeah, the rental market is strong. It's strong up north, up in the mountains too. I mean, it's crazy up in the mountains. You get up in Prescott, Pine Top, Payson, Show Low. It's nuts up there. I mean, there's nothing to buy. There's nothing to rent because everybody's coming, they're all pent up down here and they're going up to the mountains and for the weekend and enjoying the cool weather. And
and some social distancing up there, right? You get a little added social distancing. So that would make sense.
And there's that. Yeah, it's just an interesting time. I talked to a property manager here last week, and he was trying to find a rental for some people that he can't find anything. They're looking for a rental at like $1,200. I'm like, good luck.
No.
Again, Coolidge looks great this time of year, right? Keep going because you're not going to find anything here in the valley.
Eloy, Coolidge.
Well, yeah, it's just like trying to buy something. I mean, he's the same guy. He told me he had a buyer that was looking to buy around 275, and I'm like, where? A 10?
Well,
I don't know what you're going to get anymore.
And I was going to say, I think Raj is doing it right. If I was going to venture into the landlord investment property business, I wouldn't be doing it on the low end right now, especially. Simply because of the CARES Act and all this government mandated you can't evict people. Now there's all kinds of restrictions. If it's a conventional loan, I don't think they have much say on it, but if it's a government backed loan, they can get involved. But I just wouldn't even want to swim in those waters where potentially you've got somebody who stops paying you.
Yeah, you're right on the money, Kirk. Those low rent homes, those are the tenants. There's a higher likelihood they may be losing their jobs or getting furloughed. So if you want to get into the sweet spot is probably, anywhere between $2,500 and $3,000 per month rent. That's a sweet spot.
Well, a lot of those folks are probably white collar where they can be working kind of like we're doing, right? Where they're working remote no matter where their job is.
Exactly.
It's interesting how all that works and the forbearance thing. And, that's interesting too. I mean, Patrick was talking about a whole, like a whole property dump into our inventory once foreclosures start going on again, and once they start getting caught up, and we're going to see more properties hitting the market. But it's just weird. It's like that whole, well, somebody was talking about the bubble again. I'm like, bubble? I mean, we talked about a bubble 12 years ago. It's like bubble or shadow inventory. I'm hearing those words again. I'm like, really? Shadow inventory? I haven't heard that in years. That's awesome.
Yeah.
But
Yeah, I don't know if we've got a bubble that's getting ready to burst in housing like we did before. You didn't have all the liar loans. I mean, we were starting to get a little frothy with some of those non-QM type loans rolling back into the market, but not a bunch, because inventory, right? I mean, there wasn't a lot of inventory for those people to go out and get one of those types of loans. I've never been a huge proponent of down payment assistance programs, simply because I lived through the last housing crisis. And, when I was at the bank, I was on loan committee, and I'm a firm believer in having skin in the game. I wouldn't sign off on a deal if they didn't have enough skin in the game when it was an off normal transaction. And, if you're going to give somebody a house with no skin in the game, who do you think is going to be the first one to walk?
Oh.
Right? So we could see some of those are the types of folks who may get furloughed, and some of those may be coming back, and they may not have as much equity as some of the other properties, simply because they never established equity at the time of purchase. But that would be another area I'd suggest, if I was out trying to beat the streets for listings. I don't know quite how you drill down demographically, but that'd be another area I would try, and maybe it's direct marketing to certain, area codes or zip codes or whatever. But anybody who may be suffering from, some reduced income due to a furlough or temporary layoff, they may be on a very short glide path financially. Somehow try and reach those people before it's too late and help them get out gracefully before it's even a short sale situation. I think there's a lot of people who can do that and live to fight another day versus this last one we went through 10 years ago.
You got to wonder about short sales. I mean, I don't know. I mean, people can sell their home before it gets to that situation and still pocket a bunch of change. I mean, they've got, they can walk away with money before it gets to that situation. Probably. I don't think we're going to see the short sale thing. I mean, they've never really gone away. They're always out there, but I don't know that we're going to get to that situation. People,
Well, your chart, Shane, your charts that you show every week, and I love those things. As a data geek, I just love those things. They're so awesome. But they show, okay, last time we had property values collapse. Okay, we're not in that situation now. There's nothing that can say next month all of a sudden we hit some roadblock, some stumbling block, and values start to roll over. But we're not there yet. So if those people need relief, they can sell at top dollar today, especially in those lower values, like you're saying.
Most definitely. And we've got room to actually come down. I mean, even this Phoenix chart that I still have up over here, I mean, it says median rent is still it's almost $2,000. It's $1,975 median rent in Phoenix. And that's all of Phoenix. So you've got some good areas. I mean, it also is Ahwatukee, and it also is, Levine or downtown or whatever.
Maryvale.
Maryvale. Yeah, that's what I mean. It's also encompassing all that. So almost $2,000 a month median rent in Phoenix is pretty dynamic. Of course, you got.
And we are going in the direction of LA and San Francisco as far as the rent is concerned. I've seen rents going up almost 50% in the last 6 years.
Yeah, it's amazing, isn't it?
Yeah.
I mean, and people continue to pay it.
Yes.
There's nowhere else to go, really. I talked to this week. I talked to a California real estate agent. I was on a Zoom call, really about Listing Booster. It was a question about that. He's one of the owners of that, and I called, little old me called with some little, hey, can you guys answer me a question? We'll put you on with Frank. I'm like, whoa, they went way up over the top. But we did a Zoom call, and he and his wife are agents in Northern Cali. So during our call, he got a call from his wife, and they had a buyer that had put in an offer on a property, and they were hoping that he was like, oh, that's my wife. It's probably about the property, and we're going to see if we got. No, they're one of 20 offers. And I said, well, how is inventory in California? He's like, it's the same as it is in Arizona. It's awful. There's nothing out here. I'm like, who? I thought everyone in California was moving here. Who's buying in California? I mean, again, it's like little old pea-brain me. It's like, I thought everyone in California was getting the heck out of there. But then I talked to somebody else later this week, and I posed the same thing. I had the same discussion, and it was talked about that there's a lot of foreign investors buying in California right now, buying up. And I'm like, don't those people know that California's going to slip into the Pacific and soon? We're going to all be millionaires because we're going to be sitting on the beach here in Arizona.
Well, Yuma will be, but
yeah, right.
Hey, I grew up in San Diego. We've been saying that for 50 years, so hasn't happened yet. But
no.
Yeah, it's crazy because their prices are just, a whole nother stratosphere above ours in every category, and they're getting bid up. It's crazy. I don't think everybody's going to vacate California and, last person's going to have to turn off the lights. It's not going to get that bad. There's always going to be somebody who wants to pay for the premium of California.
Sure.
I just had a client who lived here, moved there, had to pay almost double for the house there that they had here. And we were talking about refinancing her, and she said, well, it's like, I'm paying, a premium to live here. I'm like, well, I grew up there. I don't know if it's worth like 50% increase. We're not talking like $100 a month, or, we're talking like $500,000. It wasn't inconsequential. So I think we will continue to see people come over here for the affordability. Our inventory is not as bad as there, I believe, is my understanding. We've got a little more availability. Rents are lower here. I think a lot of people are used to renting over there, so they can come here and maybe even buy if they can find a house. Yeah. I think we'll continue to see that migration. I just don't think it's going to be a mass migration. We'll see. I like marketing to those folks when they come over as an ex-California.
Oh, yeah. Well, it's definitely a target. I mean, California, people coming over here with their money and buying up over here. But I mean, it was kind of a telltale. And I talked to somebody else who said that, Tennessee's in the same boat. There's no inventory.
Yeah, I heard that.
I'm like, wow, that's crazy. So it's not so isolated, I guess. Where's everybody coming from? I mean, are they just emptying out of states like Illinois or whatever, and just like, where are they even working the heck out of here? And they will turn off the lights in Illinois. That last person will turn off the lights. They'll be done, and they'll stay there with their crooked politicians and everything. And that's the only people that'll stay there, and they'll be in prison, and everyone else will leave. And it's like, sorry guys, we're out of here. Click, and they'll be done. But and they'll just annex into Indiana or Iowa on the other side. But that'll be just one big state. But it's just really amazing how it's not an isolated thing. It's like what's going on in Arizona right now is being mirrored in other states, which is eye-opening in a lot of ways. Wow. So we're not just all by ourselves in the fact that inventory levels are the way they are, and construction is not going to keep up, and they can't, and that inventory is not going to hit for years. I mean, it's the resale market. So yeah, it's like, and they're building slow anyways, which I don't blame them. I mean, it's cautious. I mean, a lot of them went through it 12 years ago and saw it and got part of their butt got chopped right off, because of putting the specs up and then hoping that, praying that everything was going to keep going up, and it just all of a sudden just, as we all know, those that went through it. Yeah, I've got vivid memories of those times.
Lotteries, people sleeping overnight to get a home, having to sign an affidavit that it was a primary residence and they weren't going to flip it. Yeah, those were crazy times. Hey, we're
real quick. So I want to connect with you a little bit later if you guys have time. Maybe just 10 minutes each of you today. Do you guys have time?
Yeah, I might have time a little bit later this afternoon, Raj.
Yeah.
Or immediately, maybe 15 minutes after the call. I've got a couple personal things I have to get on today that are urgent, but
Okay.
Yeah.
mid-afternoon or right after the call.
Yeah, I'll call you in 15. How about you, Shane?
I'm good up until about 9:45 today, and then probably after noon to about 2. So.
Okay. Okay.
Cool.
Sounds good.
We are rolling a little bit over, but before we wrap up, I just wanted to ask some folks here that are on the call. Shane and I, the way we're trying to structure this thing is every other week we would like to have a special guest. We know you guys love listening to us, right? I mean, we're entertaining as all get out at 8:30 in the morning as you're starting to drink your morning coffee. But every other week we'd like to have a special guest come in for kind of the second half of the meeting. And so I'm just curious, what kind of special guests would you guys be interested in us having on? Right now for the August 28th, I've got Jay Joseph lined up. Jay's always awesome. He's a wealth of knowledge for any of you guys who have ever sat in on any of his classes. He's an appraiser, been here in the Valley for years, owned Value Trend Solutions, which is an appraisal management company, as well as JAG Appraisals. So we've got him lined up for the 28th.
He's awesome.
And Shane and I have been working to get our buddy Rick over at the 1031 Exchange Company, get him on. But I'm curious, who else would you guys like to hear? It's not going to be a full-blown class, but a 15-minute kind of little Q&A presentation session.
I may reach out to Patrick McQueen too and see if he can come on and talk a little bit about that Airbnb thing, because I find it interesting, and I'm like, this is a guy who's got his finger on the pulse. So, if he could talk, and he will, I mean, I can reach out to him and see if I can book him for like 15 minutes or something, have him come in and chat a little bit, because he's a wealth of knowledge. I mean,
Yeah, if you guys want an idea, I'm looking for rental properties and how to put them in LLCs. So
Okay.
I guess Patrick may be the right person.
Mike Abel would be a great resource for that.
was that rental properties and excuse me, Raj, I missed that.
Yeah, rental properties and how to put them in LLCs.
Okay, I get Mike Abel in here to talk about that too.
Mike is definitely a great resource for that. I mean, it's not exceptionally complex, but you want to make sure you follow a certain path just to create some insulation, right, from the whole liability perspective.
Yeah.
Mike's awesome. Mike does some of that kind of stuff for me.
I'll talk to
He's
Mike.
the guy.
Yeah, I'll talk to
He's
Mike and
definitely
have
the
him
guy.
come in, because that's Mike's wheelhouse in every way. So
Yeah.
he would be more than happy to expound on that, because that's what attorneys do anyways. Yeah, he knows a lot about that stuff. I can have him come in and chat about it.
Yeah, that'd be great. So I would like to hear the perspectives from both of them, Mike and Patrick.
Gotcha.
Okay.
Yeah,
Well,
Mike's really good at creating like shield LLCs and some out-of-state stuff where there's privacy and anonymity as well, which is really nice.
I could talk to him about coming in even next week, or we might, if he doesn't have anything going on. I mean, he likes to talk, so giving him a stage to talk on, he's all about that. Like most attorneys are.
Yeah. All right, man. Well, I appreciate you guys showing up. Thanks for participating. We'll be doing the same thing again next week. Take care. Have a great weekend, everybody. Bye now.
So that was okay.
Yeah, it was a great meeting.